Hey, kings and queens, Saundra Fenwick here, your mortgage consultant. I want to talk about the state of the real estate market as of November 2025. I did a full 21-minute live on YouTube. Go to my YouTube channel, saundraspeaks.com. I'll put it in the caption, and you can go see that full video. But right now, I just want to do a synopsis of the video to let you know we're talking about the real estate market. Real estate is moving. Now that the government is back open, the furlough is over, people are back in action, right? The SNAP benefits have been reinstated. There's a lot of stuff going on in our country's economy, and I understand why a lot of people are just like, no, I can't buy nothing right now. We don't know what's going to happen. So this administration has proposed a 50-year mortgage. There are pros and cons to everything. If you go to my page, you'll see I did some slides about pros and cons. The 50-year mortgage is good in concept because it stretches out your payments for a longer term, which could in turn give you a lower monthly payment. Okay, so that makes it more affordable for more people to buy a home. However, it quadruples the amount of interest that you're going to pay on that loan if you're not disciplined enough to pay towards your principal balance. What do I mean by that? If that 50-year mortgage is available and it comes out and you're able to get it, if you need that money to qualify for a larger house, more house, or to qualify for a house at all, then get the 50-year mortgage. However, you have to set in your mind and say, I'm not paying 4 times the amount of interest over the next 50 years. So I have to work to pay this loan off faster. What that entails is you paying more money towards your principal balance. If you get a bonus at work, you get a tax return, you get some extra money from an investment that you made. Call up your mortgage servicer. Hey, I want to apply a payment to my principal balance. Do not go on the mortgage portal where you go to pay your bill every month and put that payment there because it's going to go towards interest first. You have to call them up and say, I want to make a payment towards my principal balance. And that way, your interest is compounded monthly, and your interest is based upon what your actual principal balance is. So the more you pay towards your principal balance, the less interest you're going to pay. Now, that would be the only way that I would recommend that you get a 50-year mortgage if you are going to be disciplined enough to pay that mortgage off earlier than 50 years. If you need to take the 50-year term to be qualified for the house that you want, make it your business to pay towards your principal balance and pay some of that interest down. Now, let's talk about the headlines about Fannie dropping their credit score requirements. Yay! No credit score required for Fannie Mae. If you don't know what Fannie Mae is, it is a GSE, a government-sponsored entity, and they kind of control the mortgages moving. You ever seen where you got a mortgage with this XYZ company, but a couple months down the line, now your mortgage is with ABC company? That XYZ sold your mortgage to ABC to keep their funds open and going to be able to lend more money to more people. So Fannie and Freddie, government-sponsored entities, they oversee all of that. But then when the federal government came out with FHA loans and they were giving people 3.5% lower down payment, lower mortgage insurance, and they were making it more affordable for people to buy houses, Fannie said, and Freddie said, let's go ahead and make our own first-time home buyers program. So now they have a program. You pay the private mortgage insurance and you put 3% down as a first-time home buyer. We're going to make it more affordable as well. So now Fannie is coming out and saying, we're going to allow you to buy. We don't care what your credit score is. We're going to look at other factors. So, and then you can get a house, make it more open to everybody else. So they offer conventional loans. Conventional loans, the interest rates are solely based upon your credit. For all loans, the interest rate is based upon your credit. But the lower your credit, the higher your interest payment is going to be. Also, your private mortgage insurance. Your private mortgage insurance, how much you pay for mortgage insurance every month is based upon your credit. So you still want to work towards having a higher credit score when you go into a conventional loan. It's a great concept. Like VA loans technically don't have a minimum credit score. You can get a VA loan with any score, but we have to run your application through the automated underwriting system. They're going to look at everything, your payment histories on your other debts, your savings, your assets, your income, how long you've been on your job, all of that. It's going to calculate all of that, and it's going to spit out an approval or denial. Fannie still has a U.S. Automated underwriting system, a U.S. approval standards, as well as whatever bank or financial institution you try to get that loan from. They have their own, what they call overlays. So they have their own requirements too. Fannie might say they don't require a credit score, but this bank that has the best rate may require a credit score. So there are a lot of caveats to that. All of these are great concepts, but they all come with their own caveats and their own pros and cons. So this is also stimulating the economy. Last point I'm going to make is the Feds are supposed to meet again at the end of December and talk about another rate cut. We talked about those rate cuts. They don't directly affect the mortgage rates or consumers. They're cutting rates for the people who have the money that lend the money to us. And in turn, those rate cuts should trickle down to us as the consumer. So we don't know for sure if they will cut interest rates again and how that will affect the mortgage market. We'll keep an eye on that, and I'll give you another update when that comes. This video went a little bit longer than I expected, but I had to get this information out there to you guys. I love you. Have a good day. Enjoy the rest of your weekend. Today is Saturday, November the 15th. That's when I made this video. All right, talk to you soon. Bye.